Welcome back. It's time for First Call, when the BNN Bloomberg gets an opportunity to put a question directly to an investing professional. This morning, that's Colin Cieszynski, Chief Market Strategist at SIA Wealth Management. And Joe is up first. Joe's giving us a call from Wasaga Beach, Ontario. Joe, thank you so much for your call.
Good morning, Colin. Thanks for taking my call. It's on the Whitecap and Veren merger. I own both stocks. My Whitecap is up, my Veren is down. Is that something that I should be going with the merger, or is there another option? Because I'll probably have a capital loss with Veren. Thank you.
Well, the way that usually works with mergers is that you usually see the purchasing company tends to be a little bit weaker, and the target company, the one that's being bought, tends to be a little bit stronger. And it's quite interesting because you've seen that in the last couple of weeks, where Whitecap was very strong, and yes, I see it's come off in the last few days, and Veren had been quite weak and has started to come back up. Oftentimes you'll get an adjustment in the prices when the deal is announced, and then they tend to go a little bit quiet while the deal is playing out. So at this point in time, we've seen that, and this is not unusual, that because when the company that's doing the buying takes on additional risks, they take on integration risk, they take on the risk of whether the deal goes through or not, they take on financing risk, and this is all very common in mergers and acquisitions. And of course, because you usually have to pay up to take over a company, you've seen it. But now you've had these fairly abrupt movements that have repriced, and now oftentimes you would expect that from now till the deal closes that things would probably be fairly quiet. You'd see them just kind of maintain their relative relationship to each other based on the terms of the deal.
Any thoughts, Colin, on the combined company? I think part of Joe's question is that over the past year or more, Whitecap shares have been liked a lot more by the market than Veren shares. Veren shares traded down in a big way over the past year. Whitecap shares have essentially traded sideways. Now the two companies with the two asset bases become one company, and Whitecap Management runs the new company. Any quick thoughts there?
Well, historically, when we look at mergers and acquisitions, as I said, you go through this phase where things are quiet until the deal gets done, and then we'll see what happens. So then there's two things that we'd be looking at afterwards. Is one, if can Whitecap's management deliver on the savings and efficiencies that they think they were going to get in the deal, and if so, and the company is well regarded, and then that may continue, and its relative strength could continue to improve from there. You could go back to kind of business as usual with growth from the merger. On the other hand, the other piece when we're looking at energy companies is always the fluctuations in energy prices. So it depends on a component of that is the uncertainty of just what happens with the oil and gas price going forward, and that would impact the stock. That impact would be on the stock of whether there was a deal or not.
Okay. Thanks, Joe from Wasaga Beach, for your call. Let's go to Welland, Ontario. Jimmy is on the line. Hi, Jimmy.
Hi, Paul. Question this morning for your brilliant guest, Colin. Calling about International Business Machines, IBM. Earnings are looking good forward. We haven't had a stock split since 1999. What's going on there? Is there any whisper chatter in the streets?
Not that I've heard, but the stock has done extremely well in our relative strength rankings of U.S. stocks, which is based on the who's winning the head-to-head battles in the S&P 100. IBM's almost right at the top of the rankings. We do own it in some of the portfolios that we manage, so it's been acting really well. And we've seen a rotation within technology where most of last year. And we had seen semiconductors were steamrolling and crushing everything, and everything associated with AI as well. And that has now shifted over the last couple of months, where semiconductors have been weakening and more of the traditional tech has been doing better.
Okay. Thanks, Jimmy, for your question on IBM. Let's go to John in Toronto. John, what's your question to Colin Cieszynski?
Oh, good morning, gentlemen. Thank you. My question is on MDA Space. It's a stock that I've been holding for a couple of years, and I've been pretty happy with it. They had some pretty good earnings last week that were reported, and I'm wondering where you see this stock going over the next year or so. Thank you. I'll hang up and listen.
Oh, thanks. MDA has been very strong on a relative strength basis in our Canadian relative strength reports. MDA is almost right at the top. It's in about third or fourth position. So it's been doing extremely well. Been extremely well supported in the environment we're in with uncertainty over tariffs and things like that. Even though it's a technology company, it is somewhat defensive in that a lot of its business is based around telecom and around large government contracts that play out over a number of years, so they don't necessarily get impacted immediately. Now, we did have that sell-off back in January when there was some questions between would Apple start getting more involved with Starlink, and MDA's partner Globalstar sold off and took MDA down with it. But we can see that more recently the stock has started to bounce back as well. So as long as at this point in time, the big thing is based on competitive threats out there. If the business continues as is, then the stock certainly has been doing well. But if competitive threats did emerge again, then it could be vulnerable, and we saw that a few weeks ago.
And I can tell you, John, that Bloomberg says there are 6 buys and 2 holds on this stock, and the price target derived from Bloomberg survey, $34.70. That's about 25% higher than the current share price on MDA. Thanks to John. Thank you, Colin Cieszynski, for joining us as always. And that's it for